ideas around levels, haven't you? You've got to try and think before or after. You've got to understand order flow. You've got to understand value, why levels would work, the way we did in yesterday's classroom. This is what I try to keep getting across to Mark at the time, was it's all good having the levels, which are technical, but unless you know what you're going to do at the level, levels can become game zones, because everybody knows a level. Everybody knows a prior high, everybody knows the day low, everybody knows where these levels are. So what's going to take place at those levels? How are you going to deal when it gets to that level? Gold is the perfect example of that storyline, isn't it? Because gold's done that level at the top edge twice. Your decision isn't the fact based around the fact that it's a level. Your decision is based around what are they going to do when the price gets there or close to there. Here's gold here. We can see what the decision is on gold. We are going to be selling it, yes or no? Yes, right? We're going to be selling gold, yes? We talked about this. We've already had one sell away from this area. It already went for a measure to the downside based on this little structure here. We had a top price, we had a bottom price. We had a measure to the downside, made some profits against this bracket area, and then it's bounced straight back up. Are we going to sell it again? Yes. But where are we going to sell it again? If we just draw a level, most people will say, well, I'm going to sell it at 68. But what happens if it doesn't get to 68? What happens if it comes up short of 68? We've got to be able to do some business, right? Because 68, what is 68? Why would you need 68 to do that trade? Is the value not good enough? Well, as it transpires, the value is even better than it was before. So why wouldn't we sell it? Why wouldn't we sell it before 68? So when the price comes up, we start looking for the sell, don't we? And obviously, if we're looking for the sell, does everybody agree that there is a Baltic right there? Does everybody agree that that's where the sell is? Does everybody agree that from Monday's exercise, we could all lean against that Baltic with a sell order right there at a price of 66.9, 66.8? Yes, you could all put a sell stop in there. 66.9, 66.8. Yes? And if that's the case, was this another winning trade? Absolutely, another $400. So not only did the first trade go down for $350, the second trade went down for $400 until we got the yellow Baltic, which gave us a nice stop area that we could close off the trade if it goes back above. There's your exit. And the price goes back above the same way as we got a big block trade at the very, very bottom tick price here, and it went back above, and that was your exit for the first trade. There's a second sell. There was another opportunity to add into the sells perhaps here. There was a Baltic here. You could have added into a sell trade there. Two more sells. Target price. $400, $350. That is your day's trading. That's it. You don't need to do very much else. That could be your day's trading finished. And all you're doing now is, playing whatever else sets up. You're playing whatever else is playing. So levels are vitally important, but they're the least important. They're really important for things like commercial traders because they want to know where the liquidity is and where the stops are. But for retail traders, a lot of the times you don't get the top edge, you don't get the stop run, you don't get the break of the level, you don't touch the level to the tick. You've got to be looking in an area for the deal. You've got to be ready to execute when the trade sets up, regardless of whether it's through the top edge or 5 ticks, 10 ticks short of the top edge or somewhere in between those two prices. We've got to be ready to execute. As soon as we have value, we're ready to work offers. Have we got value with us dropping? Yes, we have. So I'm going to start working offers. Where do I start working offers? Probably above that first pink line. As soon as it goes above that first pink line and goes higher, I start looking for my lean. I'm starting to work offers. I'm going to be selling. And I'm going to be using that process that we did in the Monday Club. I'm going to be looking for something to lean against and then get into the sell trade away from that print. And sure enough, that trade was beautiful. Very easy. Down to a price when we saw a bit of value divergence on the real yields, you would probably have started to worry a little bit about that trade, and obviously booking some money into that phase there made a bit of sense. And obviously this is a halfback trade, which has some value in it. So you could have taken the halfback trade here. So we've got a low print there, we've got a high print there. You can see where the halfback is. So you start looking for the possibility of selling, yes? You're looking for the possibility of selling as soon as you get close to that area. So what happens? What happens? Well, when you get close to that area, look, we get two Voltics at that price point. So do we get two leans almost immediately against those prices there? Yes, we do. 65.1, 65 evens, 64.9. Whatever one of those three, that's where your trade is. That's where your lean is. There's your sell trade, and down she goes. Another profitable outcome. In line with value, in line with a lean, and in line with everything else. That's your next trade, and you're in again against that top edge there at 65.5s. You're in about 65 evens, and you're getting into a short trade. So your actual sell trade comes in about this price here. That's where your short trade is against a lean, and that was your next profit. And it just keeps refreshing, it just keeps repeating this process over and over again until you finally reach that point of saying, right, there it is, guys. That's the winner that I needed. That's the one that's broken it for me. This is the one that's made me. But if you think about it, 350, maybe 350, 700, another couple of hundred, maybe $900. $900 since 1 o'clock. Pretty good profits, right, for a single lot trader. $900 since 1 o'clock. You'll take that any day of the week, wouldn't you? I mean, that's not a bad outcome, guys, in anybody's world. So you've got to be able to look for these. You've got to be ready to take advantage of these little signals. If you don't, you're going to miss out on the majority of good trades. You've got to be willing to deal in areas, not single prices, not single structures, but in areas. I've got value for a sell at any point in this area. Let's get the sell done. Let's get the lean. Let's get the trade on, and let's see how we get on. That's what we've got to try and do, guys.